Welcome back to The Explainer. So glad you're with us today as we break down the post-market action for Wednesday, August 12th, 2026. And wow, what a turbulent day on the trading floor, right? If you've been looking at your portfolio today just wondering where on earth the bulls went, well, you're in exactly the right place. We're going to unpack exactly why the markets took such a heavy hit and really dig into the mechanics of today's downward momentum. All right, let's just rip the Band-Aid right off with the biggest, ugliest number of the day, a massive 588.78 point drop for the Sensex. Look, when you see a number like that flashing red on the terminal, you know it wasn't just some quiet, routine profit booking. No, that is a heavy, decisive slide downward, and it points to some serious underlying anxiety in the broader market right now. So here's our roadmap for today's explainer. We'll start with the overall August 12th market drop. Then, figure out exactly why the market fell, zoom in on the heavyweight drag, find some safe havens and winners, highlight key stocks to watch, and finally look ahead at the ongoing Q1 earnings season. Jumping right into it with our first topic, the August 12th market drop. Let's get a broad view of the damage. This paints a pretty clear picture of that broad-based slump. The Sensex closed around the 77,565 level, so that's your 0.75% drop right there. The Nifty 50 followed right along, shedding about 189 points or 0.77% to land near 24,282. But looking a bit deeper, it wasn't all doom and gloom. While the big indices tanked over 0.7%, the mid-cap segment was down only about 0.3%, and the small-cap index slipped just 0.17%, so a slight bit of resilience there in the broader market. So what was actually pulling those main indices down? Well, if we're looking for the immediate culprits domestically, the heavyweights were the IT, FMCG, and realty sectors. These three literally acted as anchors on the market today. They faced some intense selling pressure that just kept the Nifty and Sensex firmly pinned in negative territory all session long. Moving right along into our second topic, why exactly did the market fall? Let's pan out and look at the global pressures. The crucial thing to understand here is this dual global threat we're facing. On one hand, we've got this ongoing geopolitical deadlock in the Strait of Hormuz, which is severely choking oil sentiment and raising massive supply concerns. And then combine that with weak overnight cues from the US, where traders are just acting incredibly cautious ahead of incoming CPI inflation data. Honestly, it's a potent recipe for a sell-off. And what's really concerning is seeing how that Hormuz deadlock actually translates into hard numbers. Brent crude surged to $89.55 a barrel today. I mean, that puts it dangerously close to that dreaded $90 mark. For a massive oil importing nation like India, this is a huge red flag. Rising crude prices means spiked import bills, threatened corporate margins, and of course, a real risk of stoking domestic inflation. Adding literal fuel to the fire, the overnight U.S. market cues were just uniformly weak. The Dow Jones fell 0.34%, the S&P 500 dropped 0.32%, and the tech-heavy Nasdaq took the absolute biggest hit, dropping 0.6%. This broad American sell-off, totally driven by inflation anxiety, well, it set a decidedly negative tone for Asian markets before our trading day even began. All right, on to part 3, the heavyweight drag. Let's talk about the pain in the banking sector. Specifically, we need to talk about HDFC Bank. Just look at that number, a staggering negative 12%. That is how much this banking giant has tanked in just the last month alone. When a stock with the immense structural market weight of HDFC Bank experiences a slide this severe, you better believe it sends shockwaves through the entire financial sector. And today, it hit a pretty grim milestone. HDFC Bank touched a very painful 2-year low. This wasn't just a bad day for one isolated stock. It became one of the absolute biggest single stock drags on the entire market today. It placed an incredibly heavy burden on the broader banking sector and was a massive factor in keeping those major indices pinned down. Let's shift gears for Section 4, Safe Havens and Winners. Time to find some bright spots in all this red. In classic market fear fashion, right? When equities start looking unstable, capital takes flight to safety. And today, that safe haven demand pushed silver up nearly 0.5%, 0.49% to be exact. And gold bumped up by 0.34%. When geopolitical tensions rise, especially anything concerning oil and the Middle East, precious metals consistently shine because investors just want stability. Now, aside from commodities, we also saw some pretty surprising domestic resilience from the Adani Group. In a huge development, Adani stocks jumped up to 3% today. Why? Well, this rally followed major relief from a U.S. court, where a judge completely dismissed a lingering fraud case against Gautam Adani. It's just a prime example of how very specific, localized news can drive a stock up, even when the broader market winds are blowing hard in the exact opposite direction.
Moving on to our fifth topic, key stocks to watch. Let's look at some single stock extremes.
Talk about a tale of two absolute extremes today. On one side, Z Entertainment dropped a steep 5% after their Q1 profits essentially halved, falling 48% on the back of weak ad revenue. But then, on the exact opposite end of the spectrum, you have Gland Pharma. They sparked intense debate on the street by rocketing up 12% today to hit a spectacular 4-year high. Whether you were in the buy, hold, or sell camp, Gland Pharma was literally impossible to ignore today.
Finally, Section 6. The Q1 earnings season continues. Let's look ahead.
So, the Q1 earnings season is charging forward with just massive momentum right now. Over 300 companies are dropping their results today alone. But listen, if you hold names like Tata Motors, Apollo Hospitals, Grasim Industries, Hindustan Aeronautics, or HALE, IRCTC, MTNL, or SKF India, you absolutely need to be paying close attention. These massive Q1 earnings drops will likely dictate the momentum for these specific stocks as we head into the back half of the week.
And that brings us to the end of today's analysis. But before we go, I want to leave you with a crucial question to mull over for your own portfolio. Considering these heavy geopolitical macro drags, with crude oil creeping up near $90 a barrel and banking heavyweights like HDFC sitting at multi-year lows, is today's sea of red the start of a deep, painful market correction, or is it actually a massive buying opportunity for the patient investor? Think about how the data we just explored aligns with your own personal strategy. Thanks so much for joining me for this explainer. Keep learning, keep analyzing, and I'll catch you next time.